Right, so if you're here, real estate on the blockchain, driving efficiency, trust, and transparency in property transactions. As he noted, well, real quick, myself, about 20 years experience in the construction management industry, building industry, some of that in the project side, some of that in the IT side, and then within those 20 years, a lot of software development and various things like that with process refinement. So that's kind of how I'm relevant to this, construction, real estate, et cetera. Real quick question, how many people in here have been through the real estate buying process? Quick show of hands. Great. So everybody, including myself, and I know all the panelists. Okay, great. So we're going to talk a little bit about titles, maybe get into the lending, a little bit of insurance. We'll see. They've got some great ideas. The titles was one of the things to be highlighted, so we'll hit that. And then if we have time there, a couple other interesting things that came up. We're talking about, among the three of us earlier, we're tokenizing properties or the tangible assets. That was talked about a little bit in the Ethereum bit in the keynote this morning, and as well as using crypto for the actual transactions. That seemed to be pretty popular, and some things maybe around investing. That's a lot. Probably won't get to it all, but there's a little bit of the firepower we've had thrown at us around the real estate topics. So real quick on Alexandra and David, just give your bio and go for it.
Sure. So this is the third panel I've been on in this conference, so most of you already heard my spiel, but my name is Alexandra Levin Kramer. I'm an attorney with CKR Law in its New York office. Just quickly, my background is actually, I started out in London as a capital markets and securities attorney, but having grown up on the streets of Brooklyn, where my father was an early, I guess, gentrifier of brownstone Brooklyn, as in Park Slope, if anyone is familiar. I kind of grew up on construction sites, so it was always very natural for me to go back into real estate in some degree. And so as an attorney, I ended up working with some clients who were international. They were either investing in U.S. real estate or U.S. investors in European and Eastern European real estate, and ended up actually going back to school for a master's in real estate finance and investment and launching my own investment fund in alternative real estate assets. When I started learning about blockchain, it was really appealing because it seemed to resolve a lot of the inefficiencies in the real estate market. And we'll talk more about it, but as of today, I basically only represent blockchain clients in a host of different industries, underlying industries. And I was also the president of something called the International Blockchain Real Estate Association, which has chapters globally and is doing a lot of interesting things.
David?
I'm David Slonaker from out of Boise, Idaho. I was a CPA background and got into some commercial real estate later in my life. Recruited some investors, bought like a mobile home park, then bought a big apartment complex, tried to diversify that, have lots of stories of commercial real estate lessons learned or things along the way. And so then, for example, in Boise, Idaho there, my business partner and I own a commercial office building as well, and a bunch of us got to talking about some of our commercial real estate interests. We're also into the cryptocurrency, and so we're also developing right now our own lending coin in commercial real estate to do refinancing in this arena. So we're in the process of that. I've done our 506 and are headed down this road with accredited investors.
All right, great. So we've got some firepower on this side. All right, well, let's just jump right into the title part. Everyone, we had a great show of hands, people that have been through the process in general, maybe with residential or commercial, and let's just hop into the title part. There's obviously some, as we spoke a little bit, there's clearly some international, federal, and state, municipality issues with all this. So I'm going to turn it over to both of you to kind of give your thoughts on the title aspect as it was described and whatnot. And maybe David, I don't know, want to start with David or?
Either is fine.
Well,
jump in, David.
Yeah, Tally's not here on our panel from the title company, but I think that titles would definitely be an area where I see is ripe for some change and reformation, and for the blockchain capabilities here. So I think I'm excited now. Personally, I don't feel like there's a lot I can do to help generate that and drive that, it's gonna have to be some type of, I think I look at it as probably it's gonna have to be something that's legislated to help change that industry. But I could see that being, as far as my involvement in real estate, would be a wonderful thing, just to get through. There's every deal you do has all this just stuff that's just rehashing what's already been done, and you pay for it over and over and over again.
There was a
Ridiculous.
stat of like 30% or something, errors, issues, inefficiencies, maybe it's more. You can comment if you know, have any idea.
I don't know the statistic, but I can, to put it in the context of sort of globally. So, from a legal perspective, the U.S. is unique in terms of how we do transfers of property. In the U.S., it's basically a two-step process where you've got the conveyance, which is basically where you contract with another party, right? The buyer and seller contract with each other. And then you've got the second step, which is actually optional, which is to record that transaction or the new deed with the local county's office. And the reason usually that's done is because whoever is first to record it is the true owner, meaning if your brother-in-law hears that you're about to buy the house and have signed a contract, but he's the first one to run to the recorder's office and record himself as title holder, then he's going to be the one on record. Outside the U.S., it's pretty much a one-step process. There's a land registry. Usually there's a notary involved. The notaries outside the U.S. are very often actually attorneys themselves, and they have to be involved in the process, which can be very bureaucratic, and in both the U.S. and outside the U.S. lead to a lot of errors. And so I'm glad we were introduced by someone from Chicago, because Cook County was so far the only pilot project in the United States to consider blockchain. And just to put it in context, if I remember correctly, a few months before they did started the pilot project, someone in the Cook County Recorder's Office had been arrested for bribery for changing information on a deed. So that gives you,
Corruption in Chicago? Never.
who would have thought? So that happens, unfortunately, pretty regularly outside of the U.S. as well. And so, I can talk a little bit about what other countries are doing, but if you, listen to the names of the countries, they're mostly in countries that do not have a good system to begin with. And therefore, they're looking for a more efficient system, and it might as well be blockchain. Whereas in the U.S., I think there's an attitude in most counties, because in effect, we're sort of already decentralized. It's really county-based rules and regs that, there's this attitude, well, if it ain't broke, don't fix it. People are happy with the bureaucracies that they're working in, and, I think it'll take sort of a push from either the industry itself, from private individuals, talking to members of Congress, to do something about it at a national level. So as an example, what's going on in other countries, Republic of Georgia in Central Asia has developed a land registry on blockchain, which they implemented in January 2017. So it's been around for over a year. Rotterdam in the Netherlands, same thing. Kiev in Ukraine actually, and this goes back to what you were saying, allowed a smart contract to be used to transfer title for the first time ever last September. And the reason why it actually worked is because they had the cooperation of the local officials. Because, and I can talk about it more, Dubai is, the Smart Dubai initiative, where they're putting everything on blockchain, including land records, India, Russia, et
Real
cetera.
quick, I was going to say, it
Yeah.
sounds like, and from some of our discussion, it sounds like definitely outside of the U.S. has more incentive because they have nothing, right, where we, as a system, where we kind of have, or it's more broken, perhaps?
Yeah.
Okay, yeah.
Yeah.
And then the cooperation, because what's the incentive U.S.-wise to do this?
Well, to save costs for the industry, right? I
Okay.
mean, so, part of the blockchain philosophy is the removal of intermediaries, right? If we have an immutable record of data on a particular property, right? Why do we have title insurance? It's to cover mistakes, right? Now, as a lawyer, having been a real estate lawyer as well, I found it useful to go through the title insurance process, because insurance companies generally won't issue a policy if there are open items on a property. So in effect, that process cleans title every time. Whereas obviously if you had everything on blockchain, that includes not just the ownership, but liens, right? Mortgages, anything else that was already there, you don't need anyone to insure it because it's already been recorded properly.
Right.
That goes the same for real estate brokers, real estate agent, real estate lawyers to a certain extent, right? So,
Well, so David, that kind of brings up what part of David's, one of the things you mentioned that you're into on the lending coin side, this aspect related to financing. I know we talked a little, I think it's refinancing at the moment, but there's larger goals. So as we get into away from maybe the title part and some related items, use cases like the financing, appraisals, inspections, these are all kind of part of a process, right? What's some thoughts on the lending piece and what's going on there?
So the rest of the lending process as well, we think is certainly available for those efficiencies and somewhat more, like you said, there's very little driving force to help the title because there's a whole industry built around that's making a lot of money, and so they're not going to help fund that. And it's hard to coordinate buyers and sellers of real estate to coordinate that. So frankly, I don't see that happening right away.
Yeah. By the way, my own opinion, not Tali's, but I did get a chance to speak to him. He's not running from the panel because of titles. He actually told me. I asked him why, if he was involved in any actual projects going on, initiatives, et cetera, and he's not. But he's watching a lot of it, and he has a title company. It serves national locations, and he said he's just very interested because at some point he's confident it's going to happen, and just wants to be there and be on top of the space. So.
Can I comment on that? I actually had a conversation a few months ago with the president of a pretty large title company who's based in New York, and I said point blank, like, are you concerned that your business is going to disappear? And he was he was much more educated in blockchain and the technology itself than I'd expected, but he did say something that I thought was very clever, which is, well, at the end of the day, a title insurance company is sitting on a lot of data. And so if we need to, we'll just pivot and become a data company, right? I mean, in the US, there's no national MLS, there's no national database of property records. Maybe.
Oh yeah, that
that's
is
the
quite
way-
a confusing,
Yeah.
The MLS itself is quite fragmented, right? Yeah,
Yeah.
that's one of the issues there. So getting that kind of enters into two places that we had on a list of some topics. And maybe I was going to ask about some projects y'all might have been involved in, but I'll skip ahead a little. That tokenizing the whole property concept, we talked about it a little bit because with the title, I guess the title could effectively be the same kind of idea. So getting it to where there's a single system that does not have, for example, all the fragmented MLS of today. So do you think that we can get to that, whether it's through title or tokenizing the property, as a parcel? What the thoughts on the ability to get there, and if it's even needed or would be good? Yeah, David?
Yeah, I mean, I would say that I think, unfortunately, a lot of this depends on outside parties like the government, right? Local counties and officials, whether it's doing a full purchase or sale using a cryptocurrency, you can't do it without the government, in the sense of, you still have to pay taxes in US dollars. You still have to record the value, the purchase price in US dollars. In all of these other cases outside the US where this is working, it's because the local government is being supportive. So it's the same, as you mentioned with title companies, the government is sitting pretty. They don't need to retrain their own people in this technology. I mean, I just came from a panel on HR, and the sheer numbers of this kind of HR gap, like, where are all these programmers coming from? I mean, if you implement it in Dubai, it's a small enough city that it can actually be done. But the United States, we're going to have to, here's a market opportunity for anyone else out there, blockchain academies, right? Like, start training people. This is a real market.
Yeah, definitely. David, any comments on that?
Yeah, maybe if I could expand on that a little
Yeah,
bit.
please.
We talked some about the title aspect. I would also like to talk more about the banking aspect, and I apologize if there's bankers here, but I think that the whole process, if you've been involved on the sale or purchase side of that, there's just a lot of room in that process where we think that you can improve on the banking process. So we've talked about the whole tokenizing and maybe what we hold, whether it's fiat or crypto, and I think there's lots of same advantages in that whole purchase and sale of real estate. And I'm right now dealing with a bank and pulling my hair out because of this process just takes so long, and I'm about ready to lose a deal because the bank just, I don't know what they're looking at, but they won't give this loan approval, and we've gotten all this material to them, and they're still just sitting on it. So this process just drags on and on forever. But we think the whole, not just the transaction process, but the approval process, and then even the ongoing, like I've had trouble with, say, for example, these reserve requirements that a bank might have you hold on a property, and trying to track, okay, I paid these reserves, and you've had these insurance, we had insurance settlements on a hail claim, and tracking those things. It should easily be followed on a blockchain, but I can't get the information from the bank, and trying to settle it with the insurance company, and because the insurance company paid the bank, and the bank didn't cash some of these checks, and it's just step after step that I'm spending all this time trying to reconcile this, and in the meantime, I think there were checks that the bank didn't cash, so we can't find out which one it is because there were 7 insurance companies involved, and it just gets complicated. But I think those things could be so simplified and reconciled through a blockchain process.
Yeah, I would definitely second you on a lot of those approvals and background checks, and I think some of those things certainly apply to other panels that have been part of these 2 days about identity and finances and all these things, and the attestation of a person and their credibility. But definitely, I think even at the smallest level, buying one property or getting into portfolio or commercial, corporate, it's all got these, it feels like it has these same kind of issues, yeah?
Can I also just add to that?
Please.
So within real estate, there are a lot of other use cases for blockchain technology. And just to put it in context, so in 2017, of all the token sales, only about 1.1% were related to anything in the real estate industry, which I find very interesting, where, for example, gambling and betting was higher at 3.2%. So, just to put it in context. But within real estate, so we've talked about tokenizing, and we talked about this earlier. I think it's important to note that so tokenizing real estate has been pretty common, and I think it's quite misleading in the sense that what's happening so far, for the most part, is that when you hear that a company is tokenizing real estate, what that means is actually that a property is being purchased in the name of an SPV, or a special purpose vehicle, some LLC. And then just like a REIT, actually, then there are interests in the LLC, in the company that owns the real estate, that are being sold through a token, right? So when you buy a token, in effect, you're buying some set of rights related to ownership in the LLC that then holds the property. What I think is a little bit more interesting is actually fractional ownership of the property itself, meaning, especially for a certain generation, millennials in particular, who probably are not going to be able to afford to buy anytime soon a full property, this could get them on the property ladder, so to speak. So if you're actually tokenizing a property, which means that buying a token in that property means that you own 5 square feet on the second floor of that property, and whatever profits, if any, come out of that, perhaps it's like a timeshare, however you're going to structure this, I think that's a lot more interesting. That gives you almost like a fractional deed. How that's going to work with the local county recording it is a different question, but conceptually can be done. Other use cases, right? If you have a rental property, you could, in theory, subject, of course, since I'm an attorney, to local landlord-tenant laws, you could have a smart contract instead of a lease, where, and this is not my idea, I took it from an example at a hotel, where the smart contract is set up so that your payment, monthly or weekly or daily, actually unlocks the door to your unit, period. If you don't pay, you no longer have access to your unit. Again, this is all subject to local regulations, which perhaps will not permit it, but in theory, you could do that. You could do that in a hotel, right? You don't need to make a reservation for a full night. You can buy a token for an hour, depending on who you're with, at a hotel, and you
This is a family show.
From New York, folks.
listen, and you pay for it on your phone, and that unlocks the door to the hotel room, right? So there's so many use cases that are really interesting, especially with smart contracts that eliminate, dare I say, lawyers, and lots of unnecessary lawsuits, because in effect, this is meant to be self-enforcing, self-executing. I think it's fantastic.
There was in the keynote this morning, one of the use cases in the 4 or 5 major categories given from the consensus speaker was this Pangea. I don't know if any of you caught that, and that's a tokenizing in a different way the property asset. And it's probably more the angle that I come from, so I'll just ask it as we kind of maybe move on to a few other solutions or projects that are out there. And that's the idea that that rather than from an investment perspective necessarily, more like the total ownership, operations, maintenance, et cetera, throughout the life cycle of any built asset. Where that could come in interesting, I think, is if you had, for example, public works, parks, bridges, et cetera. There's always these things about where does the money get spent, community funding, these types of things. And so rather than like the deed, title, partial ownership aspect, perhaps it could be the other way around, where it's the community actually deciding what they do and don't contribute to in terms of their tax dollar. Again, lots of legislation.
Danger.
Think it'll ever happen or possible or would be beneficial to the world? David?
Interesting concept. I don't don't have a lot of expertise there, but
Neither do
definitely
I.
a
I don't know if
possibility.
anyone does, but I saw them put it up there, and I've heard a number of people talk about it during these 2 days.
No,
So-
it's a cool idea. There is something similar that I was tangentially involved with, which is a group of recent architectural school graduates who, as many of you may know, don't make a lot of money, and so we're looking basically for some avenue for their creativity, and so they're creating an ecosystem online where they can just come up with some insane idea for their own community. And if they get enough support through the platform, then they actually now have a proposal. They've partnered with, financing, with governmental
Yeah.
authorities, and you never know.
I mean, it's a bit of a Kickstarter or
Yeah,
crowdfund
yeah.
type of thing, but taking it to where the built asset is everything's revolving around that, right? Where titles, deeds, all that could as well. I don't know.
So maybe just going back to Alexandra's comments about like fractional ownership, and I think it can be simpler than that. I'm not an attorney, but when I look at a REIT, for example, you don't have to have a title to a certain section of a property. As a REIT, you're an owner in that entity, which then in turn may own those properties. So similarly, I think what we're looking at with our lending coin is we will actually have something backing the coin. So it's not like you're just investing in you don't know what, some team that may do whatever with your money. We'll have actual commercial real estate backing then that crypto or that coin. So you have that, but you don't have necessarily fractional ownership in those properties.
Right.
But that would be the support
From
for
the
that
government's
basis.
perspective, it's more in the LLC or the holding company of the properties. Well, back on, that takes me right into, I wanted to talk about a little bit about full transactions that do not involve fiat currency at all, right? So we had a little conversation, you're embarking in a business that not immediately is focused on that, but certainly could become at some point. And so, David, since you have one foot in the blockchain venture game, we'll start with you.
Yeah, we've talked a lot about this. How do you make, for example, commercial lending, how do you make that integrate with fiat currency? And so we don't think that people are necessarily ready right now to do all the transactions in a crypto coin. So we're making it where they can pay in fiat, and we'll convert that at the time of the payment. So for example, if you have a $1,000 payment each month or multiple thousands, then they can pay that in fiat, and we'll convert that to our coin, which then generates that ongoing demand, if you will, for buyers and sellers of that coin, because each month you're having payments then that will get put back into the system and allow us to buy more real estate for that backing. So we are right now looking at how do you integrate that with fiat and making that conversion ourselves. But we think that as the market and people generate more comfort with that could eventually be where you could have it all take place without fiat. And I think that's the eventual goal and would be simpler.
Alexandra, I know you have some experience with whether or not any full transactions have happened like that.
So I would say, just to my knowledge, obviously I don't know everything, as much as I like to think I do. In the U.S., so far, I have not heard of an actual case where an entire purchase or sale was done from start to finish in cryptocurrency. When you hear, especially real estate brokers saying, I am a blockchain agent, et cetera, what really has happened, as you suggested, is either one or perhaps both of the parties, the buyer and the seller, have cryptocurrency like Bitcoin or Ether to use, to spend, but it doesn't make it all the way through, meaning it is exchanged at some point for dollars, either because the seller won't accept it or because, to be honest, one of the challenges is how to exchange that amount. I mean, in New York, especially when we're talking about properties, residential properties, right, starting in the millions of dollars, the efficiency, the custody isn't there yet, right? It's very difficult to find someone that'll exchange that amount quickly. So far, right? That'll change.
So far.
Yeah, I mean, there are other jurisdictions that I mentioned earlier where they have done it from start to finish.
Lamborghinis are a little easier for people to think about, I guess.
But-
Since their value goes in half when you drive it away, right?
But I mean, I think it can be done. I think you just frankly need some good lawyers to do it because, it's like any other currency, right? You'd have to have an exchange rate set by a certain exchange at a certain time. Again, just like you were, one party was buying in dollars and the other one wanted to receive it in euros, right? This kind of thing is done all the time in outside of blockchain. So there's no reason why we can't just follow a similar model with a little twist, obviously accounting for the volatility. But it can certainly be done. But in the US, you still have the challenge of the counties, right? At the end of the day, you still have to convert it at some point to US dollars.
Yeah, absolutely. Well, we'll take a quick break and see if there's any questions out there. We've got about 10
There was one
minutes
right here. Did you
with
have
our
a
time.
question?
Any questions maybe out there? We'll take a quick segue.
Yeah, well, when we got to basically evicting people on the blockchain, I was wondering if there are any concerns about the tyranny of data as that applies to smart contracts and people's living conditions.
That's a good question. So that's why I did preface my point with saying it is subject to local landlord-tenant laws, right? So depending on the city and the state, especially New York where I live, it's very pro-tenant. It's very difficult to evict anyone. Other states, I will say, like Texas, for example, doesn't really care, right? You're out on the street.
But do you care?
So that's a different question. I mean, I certainly care. I don't. I do think we have a risk of a certain amount of humanity being lost when everything is being digitized. So I'm not suggesting that we all turn to AI or become robots or whatever. What I'm just saying is that if at the end of the day I'm also a capitalist. So if you have a tenant, again subject to local laws, that signs up for this, right? That knows going into the lease that the lease is a smart contract. And they have this, by the way, in other countries. So I'm not suggesting we don't have laws in place to protect certain people and certain classes. But you can imagine how, one of the problems in the US is how litigious we are. I mean, there's a lot of unnecessary litigation going on. And the fact is that in New York alone, I mean, certainly we have some slumlords who would take advantage of this. I'm not suggesting that it be done across the board, but on a private basis, if there is an apartment building, for example, that it's a smart building, let's call it, right? It's being constructed now where this technology might be available. It doesn't have to be on blockchain, by the way, right? You can have it done as it is now. If the two parties agree to it, that's a risk that each of them takes, right? That there are consequences to agreeing to it. Will the government come in and just like the SEC has come in, sort of after innovation and saying, oh, well, now we have to regulate it? They might, maybe they should. They can regulate it subject to, certain restrictions. But I don't know, if you're renting a hotel room, should you be prevented from being evicted because of whatever reason, right? I mean, there are certain marketplaces that we don't expect protections. Do you?
Yeah,
What do you think?
So, well, I think that we need to keep the human in the loop because exceptions happen and there are bugs and there are errors and there can be great unnecessary human tragedy if we allow the data to be the primary authority. And so this is a problem with Aadhaar in India right now. There are a lot of mid-level bureaucrats or whatever who say, oh, the Aadhaar says you're not this person, so I'm not giving you food today, or you're not getting the medical care that You know, yesterday I gave it to you, but now you're supposed to be an ADHAR, so I'm like, yes, I know who you are, but the machine says no.
Right.
And so I think this is just an important part of the conversation moving forward, to not fully abdicate and to try and figure out, well, what are the edge cases where it's okay, and what are the edge cases where we really do need a human in the loop?
No,
As a-
sorry.
There's going to be some
Yeah.
real, well, a few of the other panels have had some discussions about the identity aspect of all of this, whatever blockchain platform you're using. And I think certainly a good portion of this is going to come down to the, verification of the person is the person, right? Because that's one whole issue unrelated to specifically real estate, but intertwines with all these things. Yeah.
Maybe as a landlord too, I could also input. I mean, I like what Alexander said. If we have agreements up front, we know that we have to live in them. But then I think there's also a human side that we could build into that to say, okay, let's add some provisions along the way, because I'm not necessarily in favor of closing the doors up on somebody if they didn't pay by the first, because there are certain exceptions, and
Yeah.
I've heard a lot of them. But you know, by the third time, when you've had a promise and now you have an eviction and they still won't get out, and you've got all these extra legal costs and fees, that at some point in time it becomes ridiculous, because you can only protect so many rights. You've got to have some agreements here too, and we don't do that on a lot of other things. If you have an agreement, you live by the agreement. But we build all these extra costs into real estate to protect the individual. Sometimes I think go above and beyond what should be reasonable.
Let me just add to that. So I've actually in New York been working with the United Nations. They have their own blockchain group. And so, it was mentioned in the introduction how, if this guy loses his land records, well, you can imagine what the refugee crisis around the world has done for people who never had any proof of land ownership. This is not like a minor thing. This is a major challenge. Yeah, exactly. So it is there are people that are smarter than me that are working on it, and I agree with you, it's an issue.
Actually, it's really interesting because somebody also brought up the notion of, well, why are we talking about this in America? We're a developed country. We have well-developed laws in terms of property and that sort of thing. And that's because probably we all live in cities. I can speak, about the state of Illinois is that, the value of land in our rural areas is probably about the same as the unimproved value of the land in our urban areas. And so the title for a lot of that farmland is in, fire trap shacks somewhere in some forgotten county. And when that shack goes up, there goes those titles, right? So that's another thing to kind of keep in mind is that, the value of titles of farmland is not particularly well protected in a lot of our states. So I'll defer over here.
Yeah, so back to digitizing assets. So it seems like there's several scenarios where things need to happen, right? Like the title company and the recording of titles, that project needs to go to improve trust and verification, right? Do you guys see in the near term where, while that's going on, someone like yourself could still purchase a piece of commercial real estate, digitize it, and make it much more efficient for that piece of the equation to go on? And so instead of having 10 accredited investors, you can now have 100 millennials buying, and trading a token that represents, say, 1% of a $10 million property where they never had a chance before.
That's a great question, and I think that's what I was trying to get to, is that there's the entire process, which ideally could be made more efficient, but there's also a lot of pieces within that even if they aren't all digitized, you can definitely do some percentage of that and make the entire process more efficient. As you spoke about, one of the advantages we see in tokenizing this piece versus, say, a REIT is it does open it up to people that can't afford maybe to buy into a REIT or don't have those qualifications, and it makes it very much more liquid than maybe trying to find a market for a REIT, or your purchase and sale may take a lot longer. So I think it can both be in liquidity and in helping make that more available to the general public.
And to go a step further, you would still have to have it on the blockchain. So all of the laws that apply today for tax, for legal, that token, we'd have to know the ownership. How are you valuing that? all of those things would have to be predetermined, and I don't want to say it's a smart contract, 'cause it's probably not quite that, but you would have to be able to determine that at any point in time, right?
I mean, they may be other tokens, for example, right? There could be
True.
all those elements that revolve around this process. Could just be a one-to-many or many-to-many relationship. Because there's going to be, as we've seen, let's process everything, right? That's the theme of most of these conferences at this point, right? Is that every single thing in the current world could be converted to this, which means you're going to have a lot of tokens of a lot of types and purposes, yeah?
Yeah, and also, just to put my lawyer's hat back on, just keep in mind that those tokens are likely to be securities, just like a REIT share is a
Agreed.
security. So
Yeah.
that
Agreed.
means that, access to all these millennials probably won't happen that easily either, unless someone decides to register the entire offering with the SEC and do basically an IPO. That really hasn't been done yet. One guy submitted a really sloppy registration statement about a week ago. I don't think it's going to happen, but he just kind of slapped the form on top of a white paper. So good luck with the SEC. But you can do a Regulation A or A plus, which is kind of a semi-registration. So part of the issue with doing a Reg D or 506C is that you have to limit it to accredited investors, which are not most millennials. Although there was a bill, interestingly enough, that was introduced in Ohio, I think, trying to amend the definition of accredited investor to be skills-based, meaning if someone has a PhD in blockchain, they should be considered an accredited investor for this purpose. Unfortunately, it didn't pass. But under Reg A, you do kind of like a semi-registration, and then there are no restrictions on the securities. They can be sold just like any other share to anyone. But again, then you've got all the other issues you need to think about. So where is, talking about liquidity, right? There's no exchange to date in the United States that will trade or list security tokens. I have no interest in T0. T0 is the only one I know of that's already published that they are trying to do that. They've already applied. It hasn't been completed yet. It hasn't been built yet. So you can sell those tokens, but if there's no market for it or no way to trade it other than peer-to-peer or directly to the company, it's going to be a little bit difficult.
We're,
Absolutely.
yeah, we're real quick, we're rounding the corner on time. How are we? I don't know if
We've got about 4 or 5 minutes.
Good?
We had,
Okay, great,
we had
yeah.
a little bit of a late start.
I just wanted to mention that you guys watch the Shark Tank ever? What's his name? The real mean one, Mr. Mean, or whatever that is called.
Mr. Wonderful.
Mr. Wonderful.
Mr. Wonderful.
Okay, sarcasm. So yeah, you can Google his interview recently. I think it was with CNBC, where he announced that he is involved with the tokenization of a New York hotel. I think it was $400 or $500 million worth, although he said it's SEC approved. Okay, there's nothing that's been SEC approved, so I don't know who his lawyers are.
some
but
other acronym.
yeah, he said he's under an NDA, a non-disclosure agreement, so he couldn't really go into details, but, right.
Yeah.
So I'd be curious, to see that happen. It's not for the entire value of the hotel. I think he said something like 25%, but why not? Yeah.
Any other questions out there? One more here.
We have one right here.
So you guys were talking about digitizing the asset itself and tokenizing it, but what about the applications for the transaction itself, in your case, the loan origination process itself? Do you see value there, and how big of an effort would be involved there if I have to now bring in all of the different parties to a standard?
So I guess I would go back to my comment of the entire process and the pieces that we can either change from maybe what can be a very manual process to much more efficient processes. That's where on the continuum we're trying to continue to move that toward this process. I agree, whether it's from the origination or from the application or the credit checks, all those pieces I think can be made, whether you have credit check processing through the blockchain or through some type of electronic, those pieces continue to move that continuum in the right direction.
And by the way, that doesn't just apply to real estate. Almost a year ago, I was at a conference in New York. For those of you who know Jacob Javits Center, I mean, tens of thousands of people attended. It was a lending conference, and they had a full track just on blockchain. So this is, everyone in the lending space is on top of this. And we haven't mentioned, another interesting idea that a friend of mine is working on in New York is for crypto whales, right? People sitting on a huge portfolio of Bitcoin or Ether that don't want to sell it. So what she's done is she's actually collateralizing it to lend in real estate. Because even the whales are thinking, I better diversify. So,
Do things.
yeah, I mean, there are a lot of interesting things, but you know, in an ideal world, right? At some point, we'll get there. In the real estate space, you'd have blockchain involved from the initial advertising, right? The initial listing of the property, going through like having all the data about the property available to you, making a deposit on it, entering into a smart contract for the purchase of it, applying for financing, the closing, the recording, the paying taxes, all could happen between, you know, a buyer in China and, you know, the owner of a Fifth Avenue penthouse in New York City within minutes, right? So that's where we're going. We're not there yet, but I feel strongly we will be.
To wrap it up here, real quick, just last quick point for y'all. Everyone's here to learn. If you have a great source that you find information in around these real estate topics, maybe share that with whoever's out here.
I would say actually, so the association I mentioned earlier, the International Blockchain Real Estate Association, is kind of restructured itself as a truly decentralized association. So now there's no longer a president, there are no longer chapter chairs, but there are, you know, over 5,000 people in its LinkedIn group. You can join for free, I think, and you can look in your city for meetups and I around the world. So I think a lot of it is just educating and networking, learning what the specific issues are in your home city, your home country, finding like-minded people, and the association happens to be a good way to do that. We are actually hosting an all-day conference in Amsterdam in May, if anyone's interested in English. I'll be speaking remotely, but you know, I think there's plenty of sources for information. It's just having the time, frankly.
It's a lot to wade through. That's why I wanted to offer that. David, if you have anything on
And
that.
I would speak on the purchase and sale side of real estate. I think we have seen improvements that help us to be able, for example, my properties I found in Texas or Louisiana, I wouldn't have been able to do that before from Idaho. There's no way I had the capability to do that, maybe even without using a broker or something like that. But now there's so many capabilities to be able to find those properties, to be able to research them. I think as we continue to move that way, it helps the whole process to be able to make it more efficient, and I think it gives us the capability to find those. And I think it'll do a lot. For example, part of the reason I'm buying properties outside of Idaho is because I find them much cheaper. I'm shocked at how much better return I can find outside of the area than in Idaho. So I'm not sure why the properties are so high in Idaho.
Yeah.
They can get that for them, so I'm not going to buy them there. But it's interesting how you would think the market would, similar to what we say the stock market, it's supposed to find what the true value is. But I find differentials in real estate that I'm shocked at sometimes. Why is it that much cheaper in that area? And I think those things you'll see continue to move more toward the norm.
All right. Well, thanks a lot, both of you. And we're going to wrap it up. And thanks, everybody, for joining us.